Part of the challenge of real estate investing is number one, choosing the strategy that you're most likely to have the best success with. And number two, starting to implement that strategy. So, one thing I want to give you as a tip or just kind of a helpful reminder is whether you're trying to choose a strategy or maybe you've already chosen a strategy and you're ready to start implementing it, is to always remember that different markets are going to be advantageous for different strategies, potentially. Maybe there's a market out there that's good for rental properties and flipping, but some markets may only really be good for flipping and not so much rental properties. And maybe some are great for rental properties and flipping will be and every other strategy in between, whether it's commercial, syndications, who knows what you're doing. But realizing that every single market has different dynamics. So, easiest example, I live in Los Angeles. If you want a rental property here, I mean, it kind of depends on what your goals are because number one, you're going to be negative cash flow for a very long time if you're financing it, unless you're putting a ton of money down. Chances are you're going to be negative cash flow. And another big thing about California properties is that California is a very tenant friendly state. This is not advantageous to landlords because the rules favor the tenants. Evictions can be difficult here. I've heard squatting horror stories. The state favors the tenants, which ultimately can impact your investment potential as the owner because the state's not on your side necessarily. Obviously, you still have some rights, but for the most part, they're going to look out for the tenant before they look out for you. So, from a rental property standpoint, Los Angeles isn't really my favorite place for it, never mind the entry costs and everything else going on. Flipping, on the other hand, could be great in Los Angeles. I mean, we're talking high dollar properties. And if you know what you're doing, keyword, if you know what you're doing, it could be fantastic. So, this would be an example of where flipping might work well, rental properties not so much. And you could have that vice versa as you look around different markets. And again, this applies to all the strategies. So, always remember as you're starting to explore either the different strategy options or diving more into the strategy that you have chosen, is remembering that every strategy doesn't necessarily work in every location. So this may, and it should, impact your decisions going forward on how you want to navigate this. I'm going to leave you with just a quick example that I hear all the time. I have a video that talks about how investment properties are valued. Residential properties are valued differently than commercial properties. The very short of this, but then check out the link below for more details. Commercial properties are valued based on the income that they produce. Rental properties, residential properties are valued based on market value, which means you can't really control a lot. I've heard many people who come to California, they want a rental property and they're like, well, but I don't understand because to be positive cash flow, I would have to pay this much. Do you think the seller will accept my offer? Okay, that's not how residential properties work. You can't just tailor the price to match what income you're trying to get. You're stuck with market value. And if the income doesn't fit that or it doesn't allow for positive cash flow, it just is what it is. That's how it works. Which means if positive cash flow is your goal, you need to look at another market. You can't change that. So you're trying to change the wrong part of the equation. So this is why it's so important to understand these kinds of dynamics so you don't spend a bunch of time just being kind of lost in the ocean of mystery, if you will, and not figuring things out. One more video that I want you to check out is I dive into 3 reasons why somebody might want to consider out of state investing or outside of their local area. Why would they possibly not want to invest in their local area? I'm going to leave you in suspense for that one, but I've linked to it below. So definitely check it out. And yeah, see you on the flip side. How was that for a pun?